Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So first, let's discuss how the markets have been in the week gone by. The Indian equity market ended the week on a positive note, marked by significant gains in the benchmark indices Nifty and Sensex, which rose 2% and 1.9% week on week respectively. Even the broader markets showed upward trend with BSE mid-cap and small-cap indices gaining 1.1% and 0.1% respectively week on week. The Nifty touched record highs this week, briefly crossing the 23,000 mark intraday on Friday. The Sensex too reclaimed the 75,000 mark. Markets were boosted by the Reserve Bank of India's record dividend payout of Rs 2.11 lakh crore to the Government of India. This move is expected to assist in managing the fiscal deficit target in FY25 and will also lead to a significant decrease in government borrowing in FY25, leading to subsequently lower bond yields. Election-related uncertainties also reduced this week, aiding to the market's positive sentiment as investors anticipate political stability post the Lok Sabha elections. Globally, US markets were mixed with the broader economy focused Dow Jones tumbling by 600 points on Thursday. The tech-heavy Nasdaq fared relatively better post strong 1Q result from semiconductor giant Nvidia Corp. During the week, softer weekly jobless claims data in the US raised concerns about the delay in potential interest rate cuts by the Fed. Aspects to look out during the next week are: so the next week, the US PCE index for the month of April and weekly jobless claims will remain on investors' radar as it will influence expectations regarding future Fed rate cuts. Additionally, Indian investors will be focused on the last leg of the earnings season along with the stock-specific developments. The market will keenly await the exit poll results which are expected over the weekend. The 4Q FY24 GDP data will also be released on Friday evening. Investors are advised to keep accumulating high-quality stocks amidst this volatility phase. Now, talking about the weekly sectoral gainers and losers on BSE. Except BSE Healthcare, all the sectoral indices ended on a positive note. BSE Cap Goods, PSU, Metal, Power, Oil, Realty, Auto, Consumer Durable, Bankex, IT and FMCG were the biggest sectoral gainers with weekly gains of 4.7%, 3.5%, 2.8%, 2.5%, 2.2%, 2%, 2%, 1.6%, 1.6%, 0.8% and 0.2%, whereas BSE Healthcare declined by 0.6%. Now talking about the weekly Nifty 50 gainers and losers. So the top gainers in Nifty 50 during the week were Adani Enterprises, Coal India, Cipla, Adani Ports and Divi's Laboratories, while top Nifty 50 losers were Sun Pharma, Nestle India, HDFC Life Insurance, Apollo Hospitals and SBI Life Insurance. Now let's take a check on some key monitorables. For the week, both FIIs and DIIs net bought to the tune of Rs 4,728 crores and 6,978 crores. Brent crude decreased 3.1% week on week to $81.34 per barrel during the week. The US 10-year bond yield marginally increased by 1.5% to 4.49%. Now moving on to the corporate developments, where we'll be majorly discussing about the companies who declared their quarterly earnings. So first we have is Sun Pharmaceutical Industries, where its 4Q FY24 consolidated revenue EBITDA PAT grew 9.6%, 8.3%, 33.8% YOY to Rs 11,983 crores, 3,035 crores and 2,655 crores respectively. EBITDA margins dropped 31 basis point YOY to 25.3%. So overall decent set of numbers, it's positive for the company. Gulf Oil Lubricant, so the company's 4Q FY24 consolidated revenue EBITDA PAT grew 9.8%, 34%, 40% YOY to Rs 870 crores, 117 crores and 87 crores respectively. EBITDA margin improved 250 basis point YOY to 13.5%. So the company declared good set of numbers, so positive. Dollar Industries, The 4Q FY24 consolidated revenue grew 23% YOY to Rs 500 crores. EBITDA and PAT grew 5.2 times and 73.9 times YOY to rupees 57 and rupees 34 crores respectively. EBITDA margin stood at 11.4% versus 2.8% YOY. So the company declares strong set of numbers, so overall positive for the company. GE&T India. So 4Q FY24 consolidated revenue EBITDA was up 30% and 298% YOY to rupees 914 crores and 111 crores respectively. The company reported a PAT of rupees 66 crores versus loss of 15 crores YOY. EBITDA margin stood at 12.1% versus 4% YOY. So overall strong set of numbers declared by GE&T, so positive for the company. Hitachi Energy India. So the 4Q FY24 consolidated revenue EBITDA PAT grew by 27%, 91% and 124% YOY to rupees 1,695 crores, 182 crores and 114 crores respectively. EBITDA margin improved 360 basis points to 10.7%. So strong set of numbers, positive for the company. Eris Life Science. So the company reported 4Q FY24 consolidated revenue EBITDA PAT which grew by 36.8%, 24.8%, 29.5% YOY to rupees 551 crores, 148 crores and 80 crores respectively. EBITDA margin fell 257 basis point YOY to 26.9%. So overall decent set of numbers, so neutral to positive for Eris Life Science. Urban Fashions. So the company 4Q FY24 consolidated revenue EBITDA PAT grew 3.7%, 19.5% and 37.9% YOY to rupees 1094 crores, 135 crores and 40 crores respectively. EBITDA margin grew 100 basis point YOY to 12%. So overall good set of numbers, positive for the company. Gland Pharma's 4Q FY24 consolidated revenue EBITDA PAT grew by 95.9%, 106.8% and 144.6% YOY to rupees 1,537 crores, 348 crores and 192 crores respectively. EBITDA margins expanded by 120 basis point YOY to 22.7%. So overall strong set of numbers declared by Gland Pharma, positive for Gland Pharma. Garden Ridge Shipbuilders and Engineers 4Q FY24 consolidated revenue EBITDA PAT grew 69%, 343% and 102% YOY to rupees 1016 crores, 91 crores and 112 crores respectively. EBITDA margin was at 8.9% versus 3.4% YOY. So strong set of numbers, positive for GRSC. Ashoka Buildcon. So the company's 4Q FY24 consolidated revenue EBITDA grew 24.6%, 14.3% YOY to rupees 3052 crores and rupees 635 crores respectively. PAT was at rupees 254 crores versus a loss of 45 crores YOY. And EBITDA margins was at 20.8% versus 22.7% YOY. So overall strong set of numbers, positive for Ashoka Buildcon. Jubilant Foodworks 4Q FY24 consolidated sales EBITDA PAT grew 23.9%, 24.6% and 629.6% YOY to 1,573 crores, 310 crores and 208 crores respectively. EBITDA margin grew 10 basis point YOY to 19.7%. So a decent set of numbers, positive for Jubilant Foodworks. UPL and Aarti Industries announced a joint venture for manufacturing and marketing of specialty chemicals that find application in multiple downstream industries. The JV company is expected to commence commercial supplies by 1Q FY27 with a peak annual revenue potential of rupees 400 to 500 crores in the next 2 to 3 years. So positive for UPL and Aarti Industries in long term. Now moving on to the orders inflows during the week. So we'll be talking about a few companies who has received orders during this week. So first we have is RVNL, who received an order of worth 148 crores from Southeastern Railway. Then we have is Suzlon Energy. It received an order of 402 megawatts from Juniper Green Energy Private Limited. Then we have RITES. It received an order of rupees 915 crores from Bangladesh Railway. Then we have Transformers and Rectifiers India. It received an order of rupees 161 crores from Al Anwar International and 179 crores from Adani Group. And then we have MAN Industries India Limited. It received an order of rupees 505 crores from international entity. Now moving on to the pick of the day. So that is one of our product where we have given 2 calls. So first one is Aditya Birla Sun Life AMC Limited, where we have given a buy call at a CMP of rupees 528.8 with a price target of rupees 592.2. So Aditya Birla Sun Life AMC Limited is primarily the investment manager of Aditya Birla Sun Life Mutual Fund, a registered trust under the Indian Trust Act of 1882. So the company is one of the leading asset manager in India, servicing around 8.59 million investors folio with a pan-India presence across 290 plus locations and an overall AUM of rupees 3.4 trillion for March 24 under its suites of mutual funds, excluding domestic FOFs, portfolio management services, alternative investment funds, offshore, and real estate offerings. Talking is about its key growth driver. So the rising share of equity in the overall mix. So the quarterly average assets under management of the equity mutual fund increased by 31% YOY to reach rupees 1.5 trillion for March 24. The share of equity in AUM was at 45.8%, up 2.1% QOQ and 3.7% YOY. The market share of the mutual fund AUM was at 6.9% and the equity AAUM was at 4.9% as of March 24. Going ahead, the management aims to make structural changes in the alternate asset vertical to build on the momentum and create robust franchises in AIF, PMS, and passive businesses. Valuation at CMP of rupees 528.8, the stock is trading at a PE of 18.3 and 15.3 of its FY 25-26 estimates. Now, second, we have GlaxoSmithKline Pharmaceuticals, where we have provided a buy call at a CMP of rupees 2483 with a price target of rupees 2731. So GSK is a subsidiary of GSK PLC UK, a global pharmaceutical and healthcare provider. The company operates in India under three business verticals. First is general medicine, GenMed. Second is vaccines, and third is specialty. GSK holds around 23.5% market share in the self-pay vaccine market and operates 7 brands which are in the top 100 in the Indian pharmaceutical markets. Talking is about key growth driver. So the company expects low teen volume growth and expects to sustain EBITDA margin in the range of 26 to 27% in FY25. The company is confident of delivering quality growth led by gaining market share in general medicine and vaccines and portfolio expansion in the specialty segment. Talking is about valuation. At current price, the stocks trade at FY25, FY26 PE of 61.9 and 54 to its Bloomberg consensus earnings estimate respectively. Moving on to the corporate actions for next week. For corporate actions in the next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. So this was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.